Gold Invest. Explore opportunity.
Norsemont Mining, NOM on the CSE, is one of the most interesting gold and copper stories we've had the pleasure of talking about in a while. We managed to get hold of CEO Marc Levy to explain the story in detail. Welcome, Marc.
Hi, thank you for having me.
Always a pleasure. Marc, to start off, please provide us with the short synopsis of the Norsemont story for those viewers that might not know the company yet.
Sure. We acquired Choquelimpie, which was the third largest gold producer in Chile back in the late 80s, early 90s. We bought that in 2020. We took it public and we're advancing it towards production. We have full infrastructure in place with a 3,000 ton a day mill. So our capex is very low. We've got an existing 2.74 million ounce resource that we're looking to expand as well along strike and at depth. So we're targeting to hopefully define 7.5 to 9 million ounces. In the meantime, which is exciting, obviously being able to drill that, and investors love that, but we're also marching towards production. So it's a unique story. It's not just the boring, hey, we're going to production and to make a lot of money in this $5,000 gold era. We're also building out a larger resource. So it's kind of a fun situation to be able to move forward here. It's very exciting for us.
Well, I like to be bored like that, making lots of money in a $5,000 gold environment. Let's get into it then. Before we talk about the resources and the path to production, which you outlined for the future, you alluded to that already, the infrastructure that's already existing at the project. What would be, one of the advantages would be that it cuts down on permitting time, probably, and also, what would be the replacement value today?
Exactly. The replacement value is pretty key. So we have a 3,000 ton a day mill. It does need some polishing, but very, a tune-up, we'll call it. We have an ADR effluent plant. We have a 35-man camp. We have a lab. We have our core stored on site. We have backup generators. We have power. We have full year-round access roads. So all that infrastructure, to build that again from what I was told about 2 years ago by one of the engineers on our team, would be about 175 million US to replace. And I would assume, in the last 2 years, inflation and all that, so maybe even more. So our capex will be very minimal to just change some belts on our conveyor systems and polish up a few things, fix up a few things. So our capex isn't like some of our competitors that have had to spend hundreds of millions to go into production. So that fast tracks us to production. We do have an existing exploitation and mining permit in place. And so to get to production, we'll have to do some environmental work, which we started this year and we hope to finish by the end of the year. And then we'll be a lot much closer to production. We've told the market we're about 24 months away from production, but we'll be putting out, and that was a while ago, so we'll be putting out an update to let the market know how close we are to production, which obviously is a lot closer than 24 months, so it's very near term.
Okay.
That should be a very unique and time for us to put out that engineering report that we're expecting with the actual capex, which is very, I talk capex, but it's a joke. It might be 10, 20 million. It's not real capex of hundreds of millions, which is
for sure
huge advantage for us.
A huge advantage for you, and also although the prospects now getting something new financed are much better than they were a couple of years ago, being able to go into production with 10, 20 million, 50 million even is really a big advantage there. Let's take a step back. You touched upon the resource base. Get a bit into the details. I think it was 2.18 million ounces at 0.83 gram per ton gold equivalent in indicated, and then other 560,000, 0.69 gram per ton gold equivalent inferred. So as Correct. You said, that's a great asset to have in today's environment already, huge value. But I think that's the tip of the iceberg, so to speak. You touch upon
Absolutely.
It being depth potential and laterally, right?
Yes. So the system is a high sulfidation epithermal system. And so all the gold and silver that we have is at surface. And it's in the first 300 meters. And we've drilled down to prove that. And it's very typical of a high sulfidation system to go down 200-300 meters. All the previous drilling by the previous operator that we've inherited, and we have all the core on site, and we had to reassay and sample it, is primarily down to 70 meters, some zones 100 meters. So that 2.7 combined resource, 2.7 million ounce combined resource, is only contained in the first 70 meters.
Okay.
So if you say, hey, 70 meters contains this, and we've demonstrated through drilling that it goes down 200 and 300 meters, it's easy to say, hey, we can triple, we can quadruple the size of the deposit. And that's where we kind of get a sense of targeting 7.5 to 9 million ounces.
Okay.
When we acquired the project, there was a 43101, but it was an outdated one showing 5.5 million ounces. And in 2019, the rules of 43101 and reporting and what qualifies as a resource changed a little bit. So one of the challenges we face, but it's something that's very good for our shareholders, is all the holes are vertical. And when we do a block model, we count a block to the left, a block to the right. So if you think about like Lego, so in the middle here, if this was 50 meters apart, right, and you're counting 10 and 10, there's 20, 30 meters in the middle that's not counted. So what we need to do is we need to drill an angled hole, intersect 2 or 3 holes, and then all the mineralization in between gets counted and moved up into our resource estimate. So I make the joke that if we don't find another real ounce, we can get the resource to 5.5 million, back to 5.5 million where it was before by just doing angle holes. And that's assuming we don't find another ounce, which is obviously not the case. We already have done that, especially at depth. We know there's a lot of mineralization at depth. So it's a very unique system. It's a very young system, which is very important. So in a young system, everything is intact still. And what drove all that mineralization is a copper gold porphyry engine. So lower down, there's a engine that thrust all the gold, silver to surface. So we're defining all that, and we're going to look to see what the potential is for this copper gold porphyry engine that drove this. So that's a little bonus of the blue sky of our project. Is we have a lot of gold, we have a lot of silver. We have over 50 million ounces of silver. I know people love silver these days. I love gold, but we also have this copper engine. So we may have a lottery ticket or a blue sky opportunity to discover a large copper gold porphyry. And we are in that trend that runs from Peru, southern Peru, where I operated previously with world-class gold deposits, right into northern Chile. So we're along that whole copper belt. And so we'll see what happens. But for now, obviously, we've got a really big enough resource to define here. And we have other zones. We have about 8 kilometers of strike. So when I'm talking about our project, I'm talking about 2 kilometers.
Okay.
I'm not talking about the full 8, because there's too much. And we have 2 kilometers away from our main project, there's a drill hole of 51 meters of 1.1 grams of gold, 20 grams of silver in oxides, which is important, in the PROA zone, PROA zone. And there's a road there, but we'll drill some of that more this year. And so that will show even greater potential for growing a resource beyond what I've talked about.
But I think you are drilling already, right?
Yeah,
you
we
announced the drill program in November, December of last year.
Yeah, we commenced drilling in November. At the end of December, we have to shut down the drilling because of the weather. It's a lightning season, so a drill acts as a lightning rod. You don't want to. You can do other work on the property, which we do, engineering, metallurgy, and all that. We're hoping to resume drilling in March again when the weather clears up a bit.
Oh, okay. So then
We
and
get
then
out
it
the
takes a
final
while
winter.
for stuff to be analyzed and the results to come back. So okay, let's see how
Correct.
that goes. Well, perhaps we can talk at PDAC if you're going and see if the drilling already started up again. Then that's
Absolutely.
yeah. So
Well, we're expecting some drill. Talking about drilling,
yeah.
we obviously are expecting to get some drill results out here shortly. So before PDAC, I'm anticipating we would get a few drill holes back from the assay labs and get them out to the market.
Okay. Well, I'm certainly looking forward to that.
Should be
So
fun.
exciting stuff. But as we said, that's still only part of the plans for Choquelimpie. So we talk about the path to production, and you talked about the oxide, or you stressed the oxide potential. I think that's what allows you to get into production relatively. I don't like the word in mining context, easy, really.
Oh
But
yeah,
and a surface, a stockpiled material, the near surface oxide, that's what's supposed to be
yeah.
in the first phase of production, right?
Absolutely. Yeah, we've got stockpiles ready to be processed that would generate a lot of capital, obviously, based on our internal estimates. So we don't have a PA yet, but we'll have that at the end of the year. We can produce about 35 to 40,000 ounces a year. And because it's stockpiles and it's a leaching operation, our cash costs are somewhere around the vicinity of 500, 550 an ounce. And maybe the first few ounces, the first ounces might be even cheaper because they're ready to go. But, in a $5,000, even if you use $4,500 gold, if we're making $4,000 an ounce, it's 160 million a year on 40,000 ounces. So, and obviously we all believe that gold is going to go to 6,000 in the next year and maybe more. So it would be very, very profitable for us, and obviously provide cash flow for our investors and make us independent from the capital markets. We want to be able to generate cash flow as quickly as possible, so we never have to go back to the capital markets again. And a lot of guys say, oh, if you want to double your production, you're going to need 100 million. Where are you going to get it from? I'm like, my back pocket. If we're going to make 160 million the first year at $4,500 gold, right? We can afford to, double up. So we'll look at game plans and put plans together to put a secondary plant or expand our plant to increase production over the coming years. But the goal right now is get to production, get to cash flow in a very good gold and silver environment that we're in right now. Cash flow is king.
Okay,
Yeah,
impressive. Big plans for sure. Of course, for plans like that, you need the team to make it happen. Can you give us a bit of background on yourself, on the team behind Norsemont?
Sure. My background, as you know, I've been involved in the resource sector for over 23 years now. I've exited over $1 billion of mining companies, two of which were larger copper deposits that are one into production, one going into production. So not a lot of guys can say that. And one was a silver deal and one was a coal deal. So I'm a little bit of a copper expert. So one of the reasons why I love the copper in our project. And I've been involved in a lot of other public and private ventures, quite a few exits in the technology sector. So I know how to build out the company and create an exit. And I'm going to go on the record, because a lot of people know, Marc, you're going to define this, de-risk it, and sell it. But, in copper projects, the investment is typically $1.5 billion to $2 billion. And I'm going to say I can't do that, although probably if I put my mind to it, I could. But it's not typical. Typically, it's a bigger company like my last deal I sold to Hudbay Minerals or Inmet Mining that have bigger treasuries. This is a gold deposit. I just finished saying that we might need 20 million to put in production. I can write the check myself. My financial backers that can write the check. We don't need a lot of help. I want to put this into production and build this out. So, Norsemont is not for sale. I'm not selling it. I want cash flow. I'm a big believer that gold will be 6,000 in the next 12 months and 7,000 in the next 12 months after that. In that environment, cash flow is king, as you said earlier. So we really want to build this out. And we think that we can take this to a level where one of our, competitors that's a really amazing operator is Rio 2, that just poured gold in January, and they're sitting at a 1.7 billion market cap. So we feel we can define the resources. Our grade is much higher than their grade. So our capex is much lower. They had to invest hundreds of millions. We're investing tens of millions. So, we feel, I see a vision to get to that type of a level. With our team, we're lucky enough, the guy that put this into production in the late 80s, early 90s for Shell, the oil company, was David Lang, who's an engineer who was born in Chile but lives in Vancouver. So when I acquired the project, I said, hey, I bought your baby. Can you come help me? So of course, he helped out. And actually, he's a gentleman. He's done $25 billion of M&A. He was running Endeavor Mining, which was like a $36 billion entity. And he ran Quintana. He ran Equinox, like all multi-billion-dollar companies. Very successful guy. So he was an engineer to help us out. He actually went on record a couple of years ago in an interview with me saying this is 175 million of infrastructure. That's where I got that number from. On our team, one of the key guys on the engineering side is Michael Thiel. And Michael Thiel is an engineer. He's on our board. He lives in Santiago, Chile. He runs an engineering firm. He's actively involved on a day-to-day basis. He drilled the first hole of a project called Esperanza. And 6 years later, 2.7 billion investment. He's got 1,000 ton a day, 100,000 ton a day, operation, not 1,000, 100,000 ton a day, operation in Chile. So record time and under budget, like not over budget like typical. So he built that out from the first drill hole, so he knows what he's doing. He also helped turn around Las Bronces, which is a very complicated, big mine in Chile. So he's a mine builder. We have him on the team and his team, which is great. We have Dr. Sergey Dyakov, who's a copper porphyry expert, and looked at our data 2.5 years ago, I think, when he joined our board, and said, Mark, you've got a copper porphyry here. It's just a question of size. You know, you're in world-class territory with 1% copper, which is the dream. It's just a question, is this an Escondida or half an Escondida or not? You know, is it 1 billion tons or half a billion tons of 1% copper? You know, that's the blue sky. So he came on board and he discovered Oyu Tolgoi, which is one of the larger copper mines in the world with Ivanhoe. And another gentleman who's on our team, Dave Flint, is our chief geologist. And Dave Flint helped increase Highcroft, a mine in the U.S., go up to 10 million ounces of gold and 500 million ounces of silver. He also was the gentleman who disobeyed his orders when he was working for Freeport, and he continued to drill Grasberg. He made the discovery hole on Grasberg.
Okay.
And when everybody told him to stop the drills, he said, no, keep going, and he bet his career on that. So, you know, we've got a really smart guy who he's been involved in resource development and mine development as a geologist, which is very rare. He understands the exploration and bridging the gap towards a production scenario. And he's done underground mining. He's done a lot of epithermal systems and understands porphyries, which is exactly our system. So we're very happy to have him on our board. We also have my partner, Chuck Ross, who's involved day to day in our acting CFO, who dots the I's, cross the T's, been involved in the sector for over 30 years. So we've got a really good group of individuals that we've brought together here to, you know, advance the project. We've got a really good Roman Flores, who's our chief geologist in Chile. He's probably one of the most decorated and famous geologists in Chile. And funny enough, we went to the government in Arica to meet with the government to get on good side, let them know, hey, we're planning to put in for permitting an EIA. And we go there with Roman, and the head of the government goes and hugs Roman and says, this is the guy who trained me. This is my mentor. So you got the head of the government was mentored by our chief geologist. So, you know, that's a nice thing for him to be recognized like that. He knows the project inside and out. So it's an amazing guy to have on our team. And we also have a CFO in Chile, Susan Little, who formerly was a CFO of a bank, and she runs all of our operations down there and oversees community relations and tied in very well with our community, which is very important. So we've got a really nice team on the ground there. I'm sure I forgot a bunch of names, but you know, we've got a big team. We're very operational here, and everybody's, you know, been working with us for a very long time. And you know what? Everybody, even the local community, are banking on Choquelimpie to create a better life for themselves, jobs for themselves, economic benefits, medical benefits. So it's nice to see that everybody is going in the same direction.
That sounds like quite the team. Well, you said you don't need to or don't want to go back to the markets anytime soon, but you don't only have a great team. And by the sound of it, you also have a great roster of investors. I think you just finished financing where Crescat came in, I think, or came in again. And Rod McEwen is on your investor roster. So you've got the support there too from that side, right?
Yeah, we have Paul Matizik, who's an advisor to the board, and myself is a substantial shareholder. He's been a shareholder for a while, but he increased his position dramatically over the last several months. Rob McEwen obviously was a cornerstone investor in our previous round. Crescat increased their position dramatically in this current round. Frank, one of our largest shareholder that you know very well, increased his position as well. So all the money we've raised primarily is from strategics. We've got money from Larry Lepard, who's, a very good fund manager and saw huge value in us. And so we've got Victor Cantori, who's a very supportive shareholder of mine, and I will call him a personal advisor of mine as well. Whenever there's some tough decisions, I rely on his expertise and give him a plug. I love his company, Amex, and he loves my company, which is great. We're both investors, just to be transparent. But we've got a really good group of people out of the US and Europe primarily that are funding us and want to continue to fund us. Although we are exploring other strategics, we'd love to get a mining company involved, and we're talking to several ones out there to see if it makes sense, because we will need to do another capital raise this year for the capex I described to you and working capital. So we're anticipating to raise 30-40 million this year, and then we don't really need to go back to the market ever again. Of course, I want to do that raise once we get drill results out, get our engineering reports out, our metallurgy out, and get our share price to be more representative. What a lot of the analysts don't understand, why we're not already trading at $3 plus valuation compared to a lot of our peers. But I think we haven't really done a good job of telling the production side of the equation on our story and getting it out there to retail, just like why we're talking to you. And so I think we'll get there with some of the results we have, and then we'll look to potentially go back to the market, most likely with a strategic investor.
Okay, well, that certainly sounds like 2026 is going to be an interesting year, 2027 even more so, perhaps. So to round this off, we could talk a while still, but before this interview gets too long, Norsemont, as we just said, is in a great position to entering 2026, and now it just needs to execute. Can you please summarize shortly why or where you want to be with the company end of this year, early next year, perhaps?
Sure. So what we're anticipating to do this year, by the end of the year, we should have a PEA, which will allow us to go towards production with a better economic model. We are doing a lot of metallurgical work to better understand the mineralogy of the project, the oxides versus sulfides versus mixed zones, how easy it liberates, meaning if we can leach, there may be an opportunity to leach certain other, like there may be an opportunity to leach sulfides, which would be a game changer and would increase our resource. So we're doing a lot of metallurgical work. We will be putting out, I anticipate next quarter, we'll put out a report on the engineering, which defines exactly the timeline and the costs for the plant to get it up to 100% capacity. And so, that I think will be a game changer to qualify us as a very near-term producer, less than 24 months away. I have to be careful. And that report will go out and give the exact timeline, I think, of where we anticipate being in production. We have stated that we anticipate being in 2027 production, but we haven't given a more defined quarter or anything like that. So I think that, plus obviously drilling. We're drilling in very high-grade areas where we anticipate to encounter grades that are better than the existing resource from the past. And one thing that I like to put a plug in there, Don Durrett put out his top 10 list, and we're on that top 10 list, and we've been on there before for 10 baggers. But Don opened my eyes to the fact that our project has a half a dozen world-class holes in different areas. We have it in the northern Viscacha area, we have it in the central area of Choquelimpie, and in Surrey. So 3 different areas spanning 1.5 kilometers, 2 kilometers. We have world-class holes, not just one area. And most projects sitting in the 100, 200 million market cap in Canada don't even have one world-class hole, majority, but there isn't anyone that has 6 holes at our market cap. I got to be careful because maybe there's $1 billion or $2 billion company or more that may, but we're not there yet. And so Don opened my eyes to that, which is very unique. And so we're drilling a lot of these high-grade areas, so we're anticipating to get much higher grade material, and we want to increase the overall grade of the deposit, and of course, volume, the size. So it's going to be a fun year with drilling, obviously. We had 2 drill rigs going last year, and we'll have 2 and maybe 3, I think, this year. We have a very big budget. I think we have a $12 million budget for drilling, and that may expand. So yeah, we've got a lot of, like you said, a transformative year, engineering, metallurgy, drilling, PEA to production. So it's a big, big year, and I think we'll create a lot of value for our shareholders this year with executing. And we have the capital. We're sitting, we raised $15 million just in December while I was on vacation, not much of a vacation. So we're sitting on about $22 million right now, which, we're very well capitalized for this year's game plan.
Okay. Thank you very much. That certainly sounds like a good place to be in. And I'm sure we'll talk again at the latest in March, early March in Toronto, and then we get an update for our viewers.
Absolutely.
Thank you.
Look forward to it.